Today we're going to talk about position sizing. I'm guessing most of you, probably new traders, which probably means you have smaller accounts. There's a lot of tips and tricks that you can use with position sizing, particularly with a small account. All right, before we get started, be sure to like, subscribe, share with your friends, and also, especially if you're on YouTube, be sure to ring that bell to be notified as soon as we drop a new video. And also, if you like these videos, if you like the channel, definitely check out the Steady Trade team. It's a mentorship program where we get in way more in depth. You know, again, it's YouTube. I try and pack as much information as possible, but it's kind of a, you know, we're all limited to like that 7 to 10 minute video. The great thing about the Steady Trade team, very in depth, very detailed, spend a ton of time to really get you up to speed on all of this stuff. All right, so that being said, I'm lead trainer with Stocks to Trade, Tim Bowen. Today we're going to talk about the 4 tips for managing position size, you know, how many shares to buy, how much of your account to tie up, etc. So now keep in mind, I do want to say this, you know, a lot of the things I'm going to talk about are, I don't know if it's necessarily contrarian or even riskier, but here's the reality. Number one, always be careful, okay? Always, only, especially if you're getting started trading, only risk what you can afford to lose, okay? Because odds are you're going to make some big mistakes, you're going to trip up. So please don't be trading with the mortgage money. Please don't be trading with the grocery money. Put away some money that you can afford to work with, and you don't need it to make rent next month, okay? And the reason I say that is a lot of the stuff I'm going to talk about is aggressive, but ultimately, and you may know this, you may not know this. I mean, if you're trying to grow a small account, you have to be aggressive when it comes to sizing, because if you're right, I mean, listen, if you're right on a trade and you make 20, 30, 40, 50%, maybe you make it 100%. I mean, you nail some $2 stock that goes to $4. If you got 50 shares, I mean, it takes so long to grow your account. It takes so long to get over the PDT. If you're familiar with the PDT, you can check out we've done a ton of videos talking about it. I mean, if you've got a cash account, it doesn't apply, but you know, at some point as you start to scale up, you're probably going to get a margin account, which then the PDT applies. So I just want you to be careful. Okay, last thing I want you to do is to blow up your account, but I do need to let you know that, again, some of these things are what I would call a little bit on the aggressive side compared to what you're going to read about, you know, in a college class or something, you know, or in some sort of boring, old, moldy textbook. But I'm guessing most of you don't want to wait 40, 50 years, you know, to quote unquote make real money. So, all right, that being said, let's get started. Number one, the biggest thing what we're going to talk about is, you know, using a significant portion of your account, okay? Now, I don't want you to use two things. I don't want you to use more than 50% of your account on any play, okay? And I'm going to talk about why here in a minute. But basically, you really got to use at least half of your account, and if it's 500 or 5,000 or even bigger, to really make a dent, you know, to really grow the account. So most trades, you're going to go, you know, you're going to be using half of your account. That way, if things go bad, you know, you've still got some buffer, etc. But you're using enough of your size to make something happen. Now, on that note, if you do have a margin account, when I say using half of your buying power, I'm talking about your cash buying power, okay? Please, 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 if you've got a margin account, which is fine, which is great, don't be using your margin if you're new to trading. It's, you know, that margin is a tool that, you know, I think of it like a very advanced power tool. Okay, it's like a table saw. I think it, you know, not to get too much into woodworking here, but I think a table saw is generally considered the most dangerous tool in the shop because of the fact that, you know, when you're ripping plywood and stuff, you can't see the blade. Anyway, this isn't the woodworkers. Check out my other channel, Woodworking with Tim, but for more tips. But anyway, you know, the point is that margin is like a table saw. It's a tool, but if you don't know how to use it, all of a sudden, you know, you're down to 9, 8, 7 fingers, etc. So use 50% of your account on every trade. minimum. I think you got to do that to make a dent, to make something happen. And then, but don't use margin, only your cash balance. Okay. Next thing I want to talk about is why. Okay. Why not use 80-90% of my account? I mean, a lot of you probably are doing that. The biggest reason I don't want you doing that is, especially right now, there's so many plays, there's so many things going on. If you're 80, 90, 100% in a particular trade, you might miss a bunch of other opportunities. So let's say you've got that nice winner, and this is the biggest reason why I see people sell winners, sell stocks that are working great because they want to try the next one. Okay, and that's fine if they both work. But remember, one of the golden rules is let your winners run. So if you're selling a stock that's nicely uptrending, it's breaking through resistance levels, it's got high volume, it's doing everything you want, you sell that to jump in another one. You're limiting your possibilities, you're limiting your potential for growth, in my opinion. So now, once you're in 2 trades, you're stuck. But I mean, as a newer trader, I don't want you managing more than 2 positions anyway. So that's the biggest reason that I want you keeping that reserve buying power, so you're not missing the next trade, as they say. And then biggest thing, as you're doing this, just simply do the math. There's a lot of position size calculators out there, but you can do it in your head, or you can use a position size calculator, but just recognize lower price share, you're going to need more shares. And here's the biggest thing: take into account the daily range of the stock, the volatility of the stock, because, if you're trading one of these extreme low floaters, you may not even want to use 50% of your account, because this may sound a little confusing, but, some of these stocks will go from $1 to 10 to 20. I mean, BTX recently, I believe, went from $4 to 90 in a matter of a day, couple days. So, you don't need a ton of shares. So if you see a stock with crazy range, make sure you're sized accordingly so that you don't get stopped out on the wild moves. So that being said, take into consideration the daily range and how much the stock is moving on the day. And then the last thing that we'll wrap up is, most of you, I'm guessing, are probably on commission-free trading platforms. Again, you're probably new to this stuff. That's why you're here. But if you're not, if you're not on the Robinhoods, if you're not on, the free TDs or whatever, you may be having a commission broker, which I think you need. Ultimately, there's so many advantage to paying a quote unquote real broker, paying commissions. It's one of those things. It's like you need a real broker at some point. Robinhood is awesome if you're just dabbling, you're totally getting started, but at some point you got to move to a new broker. And that being said, you got to take into consideration your fees, your commissions. If you're looking to short, okay, you got to take into your borrow rates, your interest rates, etc. So that being said, the bigger positions you're taking on the short side, the more fees you're going to be paying. So be aware of your broker commission schedule, okay? By the way, little tip, a lot of times that can be negotiated if you're starting to trade more and more shares. But understand what your fees are and take that into consideration, especially if you're paying a per share fee, okay? Because, if you're trading some of these OTCs and stuff, you may be paying a per share and you'll think you're doing well. You get to the end of the month and all of a sudden you're trading too big a size, you're chewing up commissions, you're taking puny gains with big, if you're scalping, especially if you're trying to scalp OTCs, which I wouldn't do, but if you're trying to do that, commissions will eat you alive. You'll think you're doing well, and then it'll be the end of the month and you'll get your statement and be like, what happened? Where did all the money go? So understand all the fees. At some point, I think you do need to move to a paid broker, but free brokers are great until you get everything figured out. So, but last thing, don't complain about your free broker, okay? It's one of those things that, I'm always one of these guys about, obviously, I've got my Jocko Willink shirt on, oddly enough, but take personal ownership, okay? Understand you're using a free broker. You're getting it for free. Don't whine about it, okay? If you're going to whine about it, move to a real broker. That being said, hope you enjoyed this video. Let me know what size of your account are you trading with? Drop me a comment. Are you trading max buying power? Are you leveraged up? I mean, here's a great example, and I'll wrap up with this. I mean, literally yesterday, May 19th, 2021, I can't remember the number, thousands, maybe hundreds of thousands. Anyway, thousands, I can't remember the exact number, of crypto traders got stopped out on a Bitcoin dip, on a Doge dip, because they were using so much margin. And when Bitcoin pulled back, their brokers forced them out of those trades because they violated the margin requirements. And then here we are today, Bitcoin bounces all the way back up. So keep that in mind. Margin cuts both ways, and don't rush to use margin. When you're consistently profitable, when you're building your account, then do it. Until then, follow the tips and check out the Steady Trade team, and we'll see you on the next video.